Well, the thing is, everybody talks about I got approved for an NavyFed credit card, I got approved for an NavyFed line of credit, or I got a loan from NavyFed, but nobody really talks about how do you get approved for multiple loans and lines of credit with NavyFed. So in today's conversation, I'm going to clarify everything for you. Don't go anywhere. You're going to love today's conversation. I guarantee it. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to show you how to apply for and be approved for multiple NavyFed loans and lines of credit. But before we get into the actual step-by-step, I want to give you a quick overview of NavyFed. First of all, you don't need military affiliation to qualify for membership. That was back in the days, but nowadays you don't need any kind of a geographic affiliation, professional affiliation, or military affiliation to qualify for membership. Everybody could be a member if they want to, okay? And NavyFed is, as of today, the world's largest credit union, serving millions of military members and their families, but also non-military members and their families also. What do we like when it comes to NavyFed loans and lines of credit? We love the fact that they have very generous lines of credit amounts, loan amounts also. There is no origination fee on loans. This is really great. They offer a wide constellation of loan amounts and repayment terms. We love that. They are able to fund loans the same day if you have the right relationship with them, which is very important. You need to have the right MPR, multi-product relationship with them. And there are offers to co-sign, joint, and secure loan options. Not a problem. So this is what we love when it comes to NavyFed loans and lines of credit. Let's talk about what we do not love. Okay, things they could improve. First of all, there is no option to pre-qualify. If you have a NavyFed credit card, you can pre-qualify with a soft pull, but that option does not exist with a loan or line of credit. You're going to have to apply, and this will result in a hard pull. There is no rate discount for autopay. One thing we have seen in our research is that when you think about big banks and big institutions in general, they offer you, the Chase of the world, the Wells Fargo, the Citi, the Bank of America. You do have a discount for autopay, right? So this could be 0.25% or 0.50% or 0.75%, but with NavyFed, you don't have that. There is no option to change your payment date. Usually, if you want to change your payment date, you're going to have to it's just complicated. You can change it for the line of credit, but not for the loan. Okay, so those are things in our view that NavyFed has to change if they want to secure more loans in the future. Now let's talk about the step-by-step. The first thing you need to know, if your goal is to get approved for multiple loans and lines of credit with NavyFed, you need to understand the loan typology. I want you to understand the different types of loans and lines of credit that NavyFed offers. I want you to write it down right now. Write it down. The first one is personal loans. They have personal loans. Here, the loan amount, $250,000 to $50,000. $250, $250 to $50,000. Okay. The terms, up to 36 months, you have 7.49 to 18%. From 37 months to 60 months, you have 14.74 to 18%. You also have home improvement loans. You have debt consolidation loans. Okay. You also have savings secure loans. So you have a balance of unsecured loans and secure loans. But the APR is capped at 18%. And the loan amount goes from $250,000 to $50,000. You also have the certificate secure loans. Now we also have auto loans with NavyFed. So you can refinance a new or used car. You can buy a new or used car through a loan with NavyFed. We love that. And the rates are dirt cheap, very cheap. You're looking at rates that go as low as 1.74% APR for new vehicles and old vehicles for that matter. So this is really good. I'm trying to make sure that you understand the typology of loans we are talking about, the typology of lines of credit we're talking about when we speak about Navy Fed before you even think about applying for multiple loans and lines of credit and get approved for those. You also have home equity loans with Navy Fed, okay? So those are loans that where you can, the minimum amount is 10,000, the maximum $500,000 based on the equity that you have in your home. So you have fixed rate equity loans, you have adjustable rate equity loans. They also have the home equity line of credit. Here also the amounts are similar, 10,000 to $500,000. Here you can borrow up to 95% of your home's equity. Obviously, there are risks with home equity line of credit. You can lose your house, but this is a topic for another video. And you also have mortgages through Navy Fed, right? So you can choose Navy Fed for mortgages. So the picture I'm trying to paint here is that you have a wide constellation of loans and loans and lines of credit that you can actually get from Navy Fed, and it's important to know what they offer before thinking about having a strategy to be qualified for those loans. Very important. So step number one, you need to know the typology of the loans and lines of credit that Navy Fed offers. Step number two, I want to introduce you to a concept that we use internally here in our team for research. We've been using this for more than 20 years. We call it the balance sheet index. You need to know your balance sheet index, okay? This is a term that we use. You will not find it on the internet. Don't even try. So here is how it goes. If you have a strong MPR with Navy Fed, a strong multi-product relationship with Navy Fed, that means that you keep most of your money with them, right? Money, money, money. So they will simulate, Navy Fed will simulate your net worth based on the assets you currently have with them. And they will contrast that to your current liabilities, as well as how much your net worth is. In other words, they will look at your asset, they'll look at your liabilities, and they will do assets minus your liabilities. So they will have some kind of a net worth without even telling you. So they know, okay, this person really has about 100,000 in deposit accounts with us, and they have about 50 grand in loans. So their net worth, this hypothetical net worth, is 50 grand. So that's the first step. What you need to understand is that BSI, as we call it, the balance sheet index, is linked to DTI and CUR. Your DTI is your debt to income ratio, and your CUR is your credit utilization ratio. Write it down. Write it down. Now, the thing here is that your BSI is your total balance sheet ratio. This is your liquidity coverage. And basically, this is your total asset divided by your total liabilities. One thing you want to have, if you want to be approved for multiple loans and lines of credit with Navy Fed or other financial institutions for that matter, you need to target 50% or more. In other words, for every dollar that you borrow, you want to have 50 cents at least to cover it. So remember the word currently, that is, you have the assets now, not later, not 5 years from now, not 1 year from now. No, you have the assets now. So there is a strong relationship between your debt to income ratio and your BSI, your balance sheet index. So if you have 50% BSI and or 30% DTI or less, based on our research, you have a strong chance of being approved for multiple Navy Fed loans. For example, let me just break it down for you. For example, if the cumulative amount of loans that you are applying for, let's say within 6 months, is $150,000 with Navy Fed, and you have at least $75,000 in monetizable assets and or a DTI of $50,000 or less, you will be approved. Okay, so this is how the whole balance sheet index process works. I've been talking about DTI, and I feel like we need to spend some time to explain, because a lot of people throw words like DTI, CUR, but they really do not understand what DTI means. Let's talk about that. DTI stands for what? Debt to income ratio. What is a good DTI? DTI, by the way, just means that you are taking how much money you spend on servicing your debt, and you are dividing that by your gross income. So very simply, if you are making $10,000 a year, and you are you are using 4,000 to service your debt, you have a DTI of 40%. 4,000 divided by 10,000. Very simple. The thing here is that the DTI ratio is an important part of your financial health. And normally experts want you to have a DTI that hovers around 35% or below. So if you have a DTI that is above 35%, you might be in trouble. And this is a big decision time. I want you to talk to me right now. Speak to me right now. What is your DTI? Talk to me right. Don't look around. Don't look around. Tell me right now your DTI. Do you even know your DTI? That's a bigger question. If you have no idea of your DTI, how can you apply for and be approved for multiple loans and lines of credit with Navy Fed? That's a bigger question. So one thing I want you to do is to start, and you can do this in Excel. No need for a complicated software or app. You can do this in Excel. Just you want to tally up how much you spend on all your debts. It could be credit card, it could be your loans, whatever. And you just take that, you put it at the numerator of the fraction, and you just divide it by the denominator, which is how much you're making, and that's gross income. So you need to know your DTI. So basically, Navy Fed, they look at your DTI, they pay attention to the percentage. Okay, if you have a DTI that is 35% or less, this is great, really great. You can see this on the screen. If you have a DTI that hovers between 36% to 49%, there is room to improve. You're managing your debt adequately, but you may want to consider lowering your DTI. And if you have a DTI that is 50% or more, you want to take action, and you will never be approved for multiple loans or lines of credit if you have a DTI of 50% or more. Never. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweaty Kiwi Show. We are still having a conversation today about how to get approved for multiple loans and lines of credit with Navy Federal Credit Union. So I have explained to you the first step is you need to understand the loan typology. Number two, you need to understand what we call here internally your balance sheet index. And you want to aim for 50% or more BSI, your balance sheet index. Third, number three, you want to understand the concept of DTI, and you want to target 35% or less. You want your DTI to be 35% or less. If your goal is to be approved for multiple loans and lines of credits with the Navy Fed, you want to have those criteria in check. Number four, you want to understand what we call here, and this is not us, all experts understand it. There's something called the 5 C's of credit. Okay, so when we talk about the 5 C's of credit, we are talking about capacity, capital, collateral, conditions, and character. Let me ask you a question. Big decision time here, folks. Big decision time. Talk to me. Do you have the 5 C's? Because even before you call Navy Fed or you walk into a branch, you better have the 5 C's, or at least you need to have at least 3 or 5, 3 out of 5. If you don't have the 5, at least three. Or okay, what are the 5 C's? Capacity. Capacity means that you are able to repay the loan. Don't ask for a $50,000 loan if you are making 25 grand a year. Doesn't make sense, right? Think about it. Logic, folks. Number 2, capital. Capital means that you are able to show that you do have money coming in. All right? Ka-ching, ka-ching, ka-ching. It's all about cash inflows and cash outflows. If you are broke, not a problem. But if you are broke and working, that's better than being broke and not working, right? So there has to be some kind of cash inflows. So your capital has to be there. Collateral. In some cases, you might have to put collateral. You might have to pledge collateral to secure the loan, right? If you are buying a house or you are buying a car, the asset will represent the collateral. You also need to think about the conditions. Are you working right now? Or are you in an industry that is growing or shrinking? Think about that. And also your character. In some cases, if you're asking for a lot of money, Navy Fed wants to do a background check, make sure that you have good reputation in the community. It's all about making sure that they associate themselves to reputable people, okay? So those are really important. Those 5 C's are critical because All right, guess what? Money, 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 money. They will help you be approved for multiple loans and lines of credit. They'll help you get the money that you need. They'll help you get the cash that you need and the terms. That's very important. The terms, the maturity, as well as the APRs that you need. Step number 5, you need to have that relationship with Navy Fed. Okay. And we are talking about having an MPR with the institution. The term MPR is the term that we have been using on this in our team for the last 15 years. Is a term that we have found people using online. There is people using on YouTube, and they have been telling people, well, you are looking at your relationship with Navy Fed. But when we use the term MPR, we are speaking strictly about asset accounts, deposit accounts. We're not talking about liability accounts. If somebody tells you that you need to consider your asset accounts and liability accounts to determine your MPR, that person is lying. Okay, so you need to establish the proper relationship with Navy Fed. I know I have said this multiple times, but I'm going to say it again. It's important that if you're trying to be approved for multiple loans and lines of credits with Navy Fed, you need to also park some of your cash, or if not all of your cash, with them. And you need to open checking accounts. So they have a free active duty checking. They have free easy checking. They have free campus checking. They have free everyday checking. They have flagship checking. Which one do you qualify for, or which one are you interested in? That's your call. You also need to open at least a savings account. When we talk about a savings account, it can be all kinds of savings. It could be savings that you're trying to use to build wealth, to establish a college fund, to build up retirement funds. Talk to me. Talk to me about your projects. Okay. You can also open a CD, a certificate of deposits. This is important also. You can have a standard certificate, an easy start certificate, a special easy start certificate, a save first account. Navy Fed has it all. They also have MMAs, money market accounts, or money market savings accounts. Those are kind of cool, actually, because they will boost your savings potential. They'll help you put some cash on the side. This is important. You can choose based on the amount of money you want to put into the MMAs. This could be a money market savings account or a jumbo money market savings account. Think about that. You also want to think about retirement savings options. I'm just giving you the plethora of account options that Navy Fed has, okay? The retirement savings options, you have that also. You can choose between a traditional IRA or a Roth IRA. Think about that. What about education savings? Are you in that category right now? Think about it. You can get an education savings account, an education money market savings account. You can open an education certificate. So you have choices here. You have choices. Use them. Number 6, you need to be very careful with timing. Timing is critical, folks. One thing I want to say right off the bat is that timing is everything. You can apply and get approved for 3 loans within 3 to 6 months. One thing I need to tell you is when we talk about multiple loans and lines of credit, we are speaking about 3. If you go beyond 3, it becomes complicated. Unless you are some kind of rich, you're a billionaire or millionaire. But if you are just a regular dude like me, for instance, or a regular lady, you just want to apply for 3 loans. And you need to choose which ones, right? I gave you the loan typology. We spoke about the fact that you have a personal loans, you have a car loans, you have mortgages, you have a home equity line of credit, you have regular lines of credit. You just need to choose 3 products, okay? Don't try more funding programs within the 3 to 6 months. And timing plays a key role because it has to do with your credit score. I haven't talked about that, but this is important. If you're trying to apply for multiple loans and lines of credit within a short period of time, you better have a great credit score. Okay, so if your credit score right now is in the basement, don't even try. You want to fix it first. You also want to pay attention to your DTI. I spoke about that early. Your debt to income ratio. This is very important. And do not forget your CUR. Did you hear that? I want you to write it down. Your credit utilization ratio, very important. Credit card, credit card, credit card, credit card, credit card, credit card. Of course, this show is about showing you how to get a loan and a line of credit. But credit cards do play an important role because they contribute to your CUR, to your credit utilization ratio. What about your income? Talk to me about your income because this will also affect the timing here. So when we talk about being strategic with timing, you have to think about how much ka-ching you're bringing right now into your household. How much money are you making? Talk to me about that. What are your cash inflows and cash outflows? Talk to me about that. What is your liquidity situation? Are you scraping by or are you just awash in cash? Talk to me about that. What is the tenor of the different loans you are seeking? Tenor means term, okay? What is the maturity of the loans that you're seeking? Is it 5 years, 3 years, 2 years, 7 years? You have to pay attention to that. This is very important, okay? For example, if your loan term is 36 months, your car loan term is 42 months, and your personal line of credit is renewable every 48 months, the 36, 42, 48-month concurrence could be detrimental to your loan applications. What I'm trying to say here is that all these loans have a quasi-similar term, and that's not necessarily good because this could be heavy on your cash flow, at least from Navy Fed's perspective. So what you could try to do is to space out the loan terms. For example, personal loan 5 years, your car loan term 7 years, and line of credit renewable every 3 years. That way you're able to space out your maturities, okay? Keep in mind you can always negotiate those things with Navy Fed if you apply at a branch. I want to talk to you about the last part here. Again, folks, we are still having a conversation about how to apply and be approved for multiple loans and lines of credit with Navy Fed, okay? And the number 7 thing, the last thing you need to pay attention to is to do some planning. Planning is important, folks. We are speaking about planning. Why? First of all, planning goes into the application checklist. You need to understand how much you want to borrow for your loan, how much you want to have accessible for your line of credit, how long you would like to finance your loan, okay? Your current employment and income, I spoke about that. Your contact information, this is important. Now, one thing you need to really be careful about, especially if you're having a co-applicant, that means you also need to include that person in the planning phase. That person needs to be there. If this person is your spouse or a friend or a relative, whatever, you guys need to sit down and have a conversation as you are plotting how to go about getting approved for multiple lines of credit and loans with Navy Fed. And when I'm talking about planning, I'm specifically talking about which loans you want to go after. How much can you afford? This is important. You just don't go after certain loans and if you don't have the wherewithal to repay the loan. You need to think about affordability. What's your income and overall financial situation? Money, money, money. We come back again to money, money, money. One thing you need to understand is that there is no limit on how many loans you can apply for. But Navy Fed will be gauging their risk profile. They'll be gauging your risk profile, and they will be looking at those two risk profiles. In other words, is your risk amenable to them? What's Navy Fed's overall lender exposure to you? In other words, how much in outstanding debt you have as a borrower. So do not forget credit card balances, not just the unpaid ones, okay? A credit card limit is the true exposure Navy Fed has vis-a-vis you. So realistically, you can apply for 3 Navy Fed loans and lines of credit within 3 to 6 months. I already said that. And you can get approved if you are thinking about all the other requirements that I told you about, your TTI, your BSI, the 5 C's and NPR. This is important, okay? So for example, we have advised folks who successfully applied for a personal loan, a personal line of credit or HELOC, and a car loan. Or you can try applying for a personal loan, a mortgage, and an auto loan. And don't forget, this is in addition to the potential Navy Fed credit cards that you already have. Okay, so here you have it, folks. Thank you so much for your attention. I was explaining to you today how to get approved for Navy Fed loans and lines of credit. We spoke about understanding the loan typology, the balance sheet index, your DTI, your 5Cs, the banking that you need to have with the Navy Fed, the timing, and the planning. Thank you so much for your attention. I'll speak to you another time. But until then, remember, stay marvelous.